All right, good afternoon, everybody. I'd like to welcome you to the webinar today and want to offer my special thanks to Patrick and Infinity for hosting this for us today. A little introduction about myself. Some of you perhaps know who I am. I've been around for a little bit, and others I'm sure not quite sure who I am. So I want to give you a little bit of background about myself and what we do here at Polaris Trading Group, and get into some fun stuff today. We had a real good trading day today in the S&P E-mini, so I want to go over some of the features and trades we had today. All right. So again, who exactly is Polaris? Who am I? All right. I've been trading for 30 years plus at this point. Working for various investment banks over the years. I started in 1982 and coming right out of school, and I was basically a trading assistant for a number of years, 3 to 4 years, before ever even being able to have a trading account. Okay, I had to really, what they say, pay your dues. And so today's ease of entry, open up an account and you can trade alongside the great whites. Okay, so hopefully you want to learn enough where you don't become the great whites bait. So over the years I've worked for firms such as Lehman Brothers. All right, no longer in existence, but I was there well before they had any of their troubles. United Bank of Switzerland, also known as simply UBS in the business. And I worked there for about 7.5 years on their cash equities and futures desks over there in Stamford, Connecticut. And I worked also for, after UBS, I worked for some high-frequency hedge funds. No, these are the high-frequency hedge funds not of today, but essentially they were high-fueled trading firms, okay, that specialized in various instruments such as the S&P E-mini and so forth. During my tenure over at the investment banks, though, I was a market maker listed in NASDAQ stocks primarily. I also traded index futures and derivatives, so working for a global companies such as Lehman Brothers and United Bank of Switzerland exposed me to a lot of different trading styles, methodologies. I had some terrific mentors during those years, and it really provided a well-rounded education. Unfortunately, the retail trader today, such as many of you, do not have that type of training support system in an ongoing, in a very dynamic, chaotic at times environment. So what I'm trying to do here is bridge that gap between my years of knowledge and experience, and to offer it to the retail type trader in order to bridge that gap, and to bring that learning a little bit faster for you guys, and so it helps you guys don't trip up and make a lot of the kind of so-called rookie mistakes that that many of you do. And if I can help bridge that gap and reduce those type of mistakes, I'm doing my job. I've also worked for many portfolio managers, so I'm well rounded and heeled in portfolio risk management. And a lot of what we do here as well on a day-to-day basis is we speak about and talk about risk, okay, and position sizing and so forth. I mean, it's really important that you don't get blown out of this game. Okay, we used to say in the business, and I continue to say now, live to trade another day. In other words, we got to keep those losses small and under control. And when we have the opportunity to let those profits run, it's essential that we do so. All right, so we talk about a lot of that during the day. Now, what I want to do here is just give you an outline of my mission. All right, Polaris Trading Group's mission for our students and our members. I'm just going to hit on some of the key points here, and you can certainly read through the list as I'm speaking. All right, But primarily, Polaris Trading Group, what we developed simply there was to provide an institutional quality, all right, trading program and education for the average retail investor. I believe that my experience, 30 plus years, having been taught by simply some of the best out there, I think the retail community is a little bit misguided to a degree about what Wall Street is about, what various everybody thinks that the big investment banks and hedge funds, they have the stronghold on the market, and they know, and the retail investor, can't trade alongside them, all right, and they always feel as though they're being disadvantaged. Well, perhaps there's a degree of truth to that. But what I'm trying to do here is bridge, like I said earlier, bridge that gap. So I want to provide the highest institutional quality type trading education. All right. Many of you out there have bad habits. I have my own bad habits, okay, that I have to continually work on. So I want to help. I want to help traders unlearn certain bad habits. All right, that prevent them from progressing. All right, prevent them from achieving where they want to be. All right, as a trader, as a developing trader. I want to help you guys form new empowering ones, okay? And that will help you become consistent, profitable traders. So we talk a lot about psychology and things on an ongoing basis as part of the membership. As Patrick said, with the analytical software, okay, I mean, Sierra Chart is a great platform. What I've done is I've had my programmer take the methodology, and what we've done is we've formed and created what we call a toolbox, okay, and with certain indicators and ways of displaying market data, all right, so that it's equivalent to a professional grade type analytical software, okay. Our members here will learn some institutional trading strategies, how the institutions actually think at certain levels, what are they anticipated to do, okay? So again, we want to make sure that the average retail investor or trader like yourselves will, you can trade confidently, again, alongside the professional big money traders, okay? And, everybody has seen The Wizard of Oz, right? Pay no attention to the man behind the curtain, okay? The great and powerful Oz. Well, I'm going to strip away that curtain for everybody and demystify, the price mechanism, what happens on a day-to-day basis, all right? So the uninformed retail trader essentially can become the informed professional trader, all right? And so, again, one of my key goals is to help empower each of you, all right, to become a self-reliant, confident, and, of course, consistent trader, all right? Now, if you decide after a trial period, you like what we do, it resonates with you, okay. I just want to highlight some of the things that you'll learn, all right, as being a member of the Polaris Trading Group family. One of the key things, I think, is one of the number one items is simply how to identify and trade from the dominant side of the market's price action. All right, prices go up, prices go down, they trade sideways, okay? How do you know who's in control at any one point in time? All right, these are some of the things you'll definitely learn. We're not counter trend traders here, okay? Nor are we specifically trend traders, but we do want to trade on the dominant side of the prices auction, okay? And there is, in fact, one on a day-to-day ongoing basis, okay? We have some bigger momentum strategies, multi-time frame, specific time zones we talk a little bit about early in the morning. There's one specific dynamic price level, all right, that acts as the anchor for the entire trading session. As a matter of fact, when we get to the charts, I'll show you what that was today, and it's simply part of our opening range strategy trade setup. Market structure can be discussed and viewed in many ways. Market profile is common synonym for market structure. We have something called the law of pivots and the law of alternate pivots, okay, and again, I'll show you how we demonstrate and how we use that. You'll learn how to determine what the signs of strength and signs of weaknesses are in the market, okay, on an ongoing basis continually. There are signs, you need to look at them, you need to find them. They're almost like, if anybody played poker, you're reading the other players, hand gestures, eye movements. It's a tell, all right, in the market. So, there's a way of determining that. All of our trade setups have certain qualities. All right, you'll learn more about that. Of course, you'll learn specific trade setups. And one of the key things, just I mentioned about, early when I was working for portfolio managers, is we want to help you guys, learn proper trade risk management, okay, and techniques to protect your capital. Because as I said, live to trade another day. If you lose your capital, okay, because you've made, a boneheaded mistake, okay, all right, we all make boneheaded mistakes, but you want to learn from them. Okay, you want to make sure that you don't repeat those. Okay, and I understand from speaking with Patrick, there's many of you out there that are not able to trade the entire day. Some of you have other full-time jobs, and you're trying to work on this on a part-time basis. Some of you work in the morning, some in the afternoon. We're here all day long. Okay, there are other trading rooms, from what I understand, out there that only are only open for a few hours a day. We're here all day, 9 a.m. to 4:30. This is a full-time job for us. Okay, we pace ourselves throughout the day, and so whether your schedule is in the morning or afternoon, we have something for you, and and that's a big important thing that Patrick had mentioned to me. Just a brief outline here, again, because I want to get to the charts and speak about today's action, but the outline in terms of our strategies, as I mentioned earlier, we have an opening range strategy. You learn much more about that. It's about that key price marker for the day. One of our core strategies, and you'll see some demonstrations of that today from today's action, is what we refer to as the premium and discount. Okay, and we utilize what we have is created a CCI crossover system. Now the CCI has been around there out there for a long time, the Commodity Channel Index. We've basically created our own proprietary version of how to use that. It is a statistical measurement, okay, of price action, and my background from the investment banks is very heavily weighted in statistical analysis, though don't let that scare you, okay? What we've done here is the approach, the methodology, what we describe, and the indicators that we've created are all there to measure various extremes in the market. Okay, you don't have to you don't have to know how that's calculated. We do all that for you. The next type of trade setup we look at, it's relatively new for our members. It's called the stacker. Okay, so if you think about casinos, all right, everybody says, oh, the casinos are stacking the deck. Okay, well, why do they stack the deck? Why is it that phrase is even out there? Because it's designed to help give the stacker, i.e. the casino here, the edge, the advantage. Okay, well, our version of the stacker, right, identifies when there's a trend shift. Okay, and we do it quite early and accurately in terms of when the trend is shifting. Everybody knows, hey, it's an uptrend, after the trend has been in effect for a while. But do you really know how to identify when it's actually in the process of shifting? Okay, so we have a specific trade setup that identifies that. It's getting more popular amongst our members, all right, and it's a very powerful one because it helps get you onto a trade in the proper direction earlier than the majority of most other people out there, in the world. Okay, all our strategies have specific criteria. All right, simply price, pattern, and momentum, and you can read what they're about there: key price zones, corrective or impulsive moves, and momentum. So we can all narrow it down to price, pattern, and momentum. And as I mentioned, in what you'll learn is the various 4 qualities of our trade setups. All right, and it's simply just being able to be identifiable, repeatable, quantifiable, and measurable. Okay. And the last section here, in terms of the overall descriptions, is we have something that we have adapted from a fighter pilot, all right, Captain John Boyd. It's called the OTA loop. All right, and the OTA loop stands for observation, orientation, decision, action. And again, it's a decision matrix. So a lot of traders, how do you think like a trader? How do you, many of you have perhaps heard the phrase, trade what you see, not what you think. Okay? There is some truth to that, but if you don't know what you're looking for, right, you don't know what you're seeing, well, you end up trading what you're thinking, and you don't want to do that, okay? Trade what you see, not what you think. Well, what we've done here is created a decision loop, decision matrix. All right, it's a technique to help you think logically, step by step, very structured approach. And by the way, that in and of itself is an entire webinar, so certainly not enough time to do here. But these are some of the descriptions and so forth of things that will within the membership. Okay. Patrick, in preparing for the webinar here today, Patrick had said, he's been, as he had mentioned, he's been in the room for quite some time, seeing what we do on a day-to-day basis. Okay, and he says simply, I'd like you to take the members or the guests, the trial members here today, and the webinar guests, in a daily, what do you do on a day-to-day basis? Okay, so what I decided to do is put together what we call standard trading operating procedure. Now that's an actual document that we have for our members in our members area, okay, in our education, and it really outlines the entire day step by step. Now, this is not that particular outline, but I wanted to bring that concept in. And many of you perhaps do not have a routine, a structured approach to trading the market. To what do you do in the morning? What is the first thing you do? What is the second thing you do? What do you look at? Do you sit there and read the news? What are you deciphering? Within the context of the news and so forth. Okay, this again bridges a certain gap that perhaps many of you don't have a structured approach. Okay, I am a commercial instrument pilot myself, so I'm very much into procedures, okay, that keep you safe, in terms of flying. So there's certain procedures, that we conduct on a day-to-day basis that keep us safe in our trading. Okay, so the overall what we do here is to begin the day. I write out every morning for our members, okay, is what we call a daily trade strategy briefing, okay, and it's posted. So if many of you go onto the website while you're listening, PolarisTradingGroup.com, you'll see in the blog section today's daily trade strategy. It is posted at 4 p.m. in the afternoon, but our members receive the premium version before the opening of the market. Okay, but it is posted to the blog, so you're welcome to go read that from today. And what that does is that identifies some key price zones, all right, for the day, what we're kind of anticipating. It's essentially our daily trade plan. Okay, what do we, what happened yesterday? Anything occur overnight? What does it look like for today? Let's lay out some levels and a plan. Okay, you don't go anywhere. You don't go on a trip without making a plan. Okay, sports teams, they don't go to a game without making a plan. It's okay to amend that plan, okay, as the day unfolds, but you need to have a plan. If you do not have a plan, okay, you're already disadvantaging yourself before you even start. Okay, so that's where we start each and every day. Then when we get into the charts, so we have a pre-market briefing at 9:15 Eastern Time, and I go over the big picture. And much of that I use a market or volume profile style chart. Okay, and what I really like about the market profile and volume charts is that it provides a certain level of context. Okay. I'm a bull, I'm a bear. Okay, well, what does that mean to me? Well, unless I know what time frame, you're bearish on or bullish on, okay, I don't know what you really mean. So context is extremely important. So we try to go over each and every morning and try to get, have an understanding of what the volume distributions have been the prior day. Many times we combine several days and we get an overall view of what's actually happening. So it really gives an overall planning picture. Okay, so and Sierra chart, by the way, and I'll show some charts in just a moment. They have a great, for dollar, they have some real good features built in where you would need to, pay premium prices to third-party vendors for the same type of information. So it's really very useful what they have. Since I've worked for the investment banks, okay, they taught me a lot about, buying and selling extremes. Many of you probably you use the terms overbought and oversold. Okay, overbought and oversold are relative. In the eye of the beholder. What is overbought? What is oversold? Okay. Mathematically, they're very difficult to measure. Okay, but statistical extremes are not. All right, and that's why the investment banks use statistical type calculations, to determine, how far price has moved away from certain key, benchmarks of what they're looking at. Options pricing models use a lot of statistical, extreme type calculations, right? So what we've done here is, and again, don't be scared with the term statistical. All right, again, all this stuff is laid out for everybody, and you don't need to, get out your calculus calculator to figure all this stuff out. But simply what they are, okay, are price targets and potential reversal zones. Okay, that's what we want to know. Hey, what's a price target if I'm long or short? And if it reaches that, particular price target zone, is there a reversal going to happen? Okay, well, how do we know if it's going to reverse? Okay, and again, we talk about that in the membership and the education. As I mentioned, the 5-minute one anchor price for the entire session. You'll also identify some dynamic throughout the course of the day. I'm constantly updating dynamic support and resistance points using a 1500 tick, and again, we're going to look at those charts in a moment as well. And I'm continuously monitoring the market's dynamics. Okay, market internals, advanced decline lines, ticks, ratios, everything for everybody. So it's very much active analysis throughout the course of the session. Okay, I use the chat box to type in levels. Okay, in case you happen to step off the desk, or if you say, for instance, you're in the morning, okay, a session, but you're working and you've missed out on the afternoon session. Well, what we do here as well is we save the chat, okay, the public chat in the chat room for everybody, and we archive it on the website. So again, while you're listening, if you want to go to the website, under the live trading room, there's a drop-down menu that says the PTG trading log, and you'll see by month, and you just click on the folder, and you'll see the actual trading log for the day, what we discussed. So you can take a look at some of the commentaries and levels and so forth in a review period for yourself after hours, and look at what we did in the trading room and see how it played out on the chart. So that's public access. All right, it's not members. I mean, that's available to everybody. We're very transparent of what we do. All right, we don't hide anything. Okay, we want to make sure that everybody gets the full complement of what we do. And one of the key things everybody wants to know, well, what are your trade setups? Okay, type of thing. Well, we will get to those. Okay, but importantly though, we want to identify certain key levels, and we want to then, from that, what is the trend direction? Is it trend, non-trend, direction? What is it? Up or down? Okay, today was a trend down day. Okay, so once we have that established, okay, we know what the trade plan then is how that's going to unfold for us. Okay, until something changes. Okay, until the market effectuates a change. All right, so then we just simply go ahead and since we know, for instance, that today we were playing from the short side, we're just simply looking to identify and execute various specific trade setups. And then what we look for is, many of you might have in your own personal studies, have come across something called market harmonics, right? And simply, each individual instrument has its own personality, all right? And so here in the S&P specifically, which we focus on my majority of the day, although we do trade other instruments as well, the natural S&P E-mini harmonic is about 3.5 points. All right, it rotates up 3.5, down 3.5 from swing high to swing low, and then there's multiples of that, 5.5 points, and then 8 points, and so forth. That run pretty consistently over time. But realistically, even taking a 3.5 point harmonic swing high to swing low, do you actually think that you or I are going to get 3.5 points? All right, no, because you're not going to get the high, nor you're going to get the low. So what we really look for is this common rotation factor. The rotation factor here that we've identified that it repeats itself over and over is simply 2 points. Okay, so if you're trading 1 or 2 contracts or multiples of, we're just looking for a 2-point rotation. So we want to get in at at an attractive price with a relative low risk profile, and then look for that 2-point rotation. Okay, and we have specific ways of, in fact, doing that. Okay, and again, this is all part of what we do during the day and part of the membership. All right, so these are just some of the outline here, and then what I'll do here in a moment when I take a look at the charts, we're actually going to take you through today's action. Okay, and I guess everybody wants to get to that point. But before I do, all right, I just want to reiterate, what we do here at Polaris using the Sierra charts, our AT charts, which is the infinity version. Okay, it's our primary teaching platform. All right, it's very easy to use. It's lightweight on system resources. All right, I know some of you mentioned a little bit earlier about Thinkorswim. Okay, I'm not that familiar with any of these other, how I know TradeStation is a hog, okay, on systems resources. So that means you really got to have a real powerful computer. But let's say your budget's not a powerful computer. Okay, well, you're at a modest price point. All right. Well, Sierra chart is very light on it, so it doesn't need a lot of system resources, RAM, and all that to function properly. And they do a great job updating their platform on a day-to-day basis, it seems. Okay, they got some great standard built-in features, as Patrick was showing you prior to the presentation beginning, about the volume profile, the delta footprint charts. Absolutely love those. Okay, that's a class in and of itself. All right, and an ongoing educational there as well. All right, integrated chart trading. Again, Patrick stole a show there to show you visually the integrated chart trading feature. Love that. All right, you can see what you're doing not only on the dome, the price ladder, but right there on the charts as well. They have some features for position sizing and risk management that again, I'm not going to get into here. And what we do as well, and so part of, for our members, I already have created templates for everybody. Okay, what we use in the trading room. Okay, so what you want you want what I have. Okay, and simply I agree, you should have what I have. So I've created templates for everybody, and that way they can have it. For those that have the software, they have it on their desk. And they can work at home and review over the weekends and so forth when it's convenient for them. Okay, so let's just get to the charts, which is the fun part here today. Okay, and let me just change the okay, let me know if everybody sees the charts okay. The profile chart should come up. Okay, great, terrific. All right, so Patrick was showing you a little bit earlier about the delta footprint and the volume profile chart. Now, Sierra chart gives you some various options and some flexibility in terms of going over some of these, creating various profile charts. Simply what I've done is take each day here is an S&P day, and day session only, because I particularly just use day session only. And I just created a simple volume profile, and the gray area there represents the value area, right, which represents 70% the most active volume throughout the course of the day, and that provides a nice visual graphic, okay, for to begin the day, the analysis. So again, I start with that daily trade strategy that's passed out to members via email, and then when we start our pre-market briefing at 9:15 a.m., we simply go over key aspects of the profile. Now again, with today's presentation, don't have that full time to get that involved with that, but this is how we start. Now there are many of our members that do not understand market profile, okay, and again, you could spend literally a lifetime learning about market profile and all the ins and outs and nuances and so forth. I don't feel that's really necessary, okay. Some of the basic concepts are important. High volume areas, low volume areas, what do they mean? What do they imply? Has value increased? Has value decreased? Okay, these are concepts that we do go over on a day-to-day basis, during my explanation. So a lot of it is kind of osmosis in a sense. All right. When I learned years ago, back in the early 80s, okay, I was not in a formal training program. Okay, I sat by a trader, okay, and said, I was his whipping boy, I was his grunt boy to do whatever he wanted me to do. But during that time, he said, listen and learn. Watch, listen, and learn. Okay, and so again, if you think about the time factor that it took me, all right, not that I didn't have a low aptitude, I had a pretty high aptitude, for learning, but the process was, you can't do this in a weekend seminar. You can't do this by reading a couple books, crash course reading of a book. It takes time. It takes looking over somebody's shoulder. Okay, it's you just can't seem, okay, I'm gonna 3-week course and boom, I'm done. I'm gonna be ready to trade by side by side with the best trader at Goldman Sachs and Morgan Stanley. Okay, it's not going to happen. But if you have an ongoing educational process that you're looking over somebody's shoulder, that you're learning osmosisly, yes, you're hitting some of the books. There is some, definite, text that you need to understand about things. But most importantly, it's sitting and watching and listening, asking some questions, all right, and getting a sense and taking lots of notes, all right. There was one thing that I did when I was a youngster. I still am a youngster, by the way. Everything's relative. But when I was young, I had a pad of paper, and I believe I still have that notebook somewhere, hidden away somewhere in one of my storage boxes. But when I was young in the business, I would take a lot of notes, and that's what my bosses, my trading mentors at the time, to take a lot of notes. So I encourage our members to do the same. And again, this is not a process where it's just so easy. But it is an ongoing learning curve. And so we start off the day with this, and you'll see a whole bunch. These are the levels actually from today. And some of these levels are more important than others as the day unfolds. But you can simply see that today's activity closed here near the low of the day, the lower quartile of the day. But this morning early, we got a little bit of a pop and a rally up to the 1874s. And I had mentioned to the membership, to the chat room, to everybody, was, if there's not a conversion above 1874s, now simply what a conversion means is being able to move above that level and hold it. If you're not able to do that, then the market will fade away, fade back down, and we're going to look for our rotation back down to 72, 70s, 68s, all right, were some of the key point levels. So this is how we start the day each and every day. I just kind of give it that overview. And then let me move on to the next one as we drill down into these, what we call our target master static zones, statistical extreme zones. Now, these frame out, okay, the market as well, but now we're getting a little bit closer to the action, and then as you'll see, we'll drill down to the next level, which is 5 minute, and then get into our execution opportunities. But simply what we want to be looking at is you know, we don't know if prices are going to go up or down in any one day, but you know, if they do go up, okay, you know, what we want to do is we want to say, okay, here's an X, we just simply call them X zones. The X zone, this is a statistical zone, okay? Now, the calculation and the concept is right now, as I said, is a little bit beyond this webinar presentation, but this is a statistical zone. So if price, you know, hits one of those zones, we're going to be looking to, if we're long from below, we're going to be looking to sell our longs into that zone, at or around or into that zone, okay, as the market dictates. But these are extreme zones, and when they're reached, their targets first, price targets first, and their reversal points second. Okay, so you can see a couple examples here. Yesterday in action, we got down to the 60s, which hits the extreme level of a normalized range. So the red and the green areas, this is called our target master. These are 5 days normalized ranges, and then there's an algorithm there that calculates certain percentage of ranges extended, and then you can see here it pretty much hit right to the tick. All right. Now this is not an aberration. Okay. You'll see many times, you know, as we go back historically here a little bit. Okay, you'll see these zones hit over and over and over again. This one exceeded a bit, but over and over again. Okay, and I can cite numerous examples throughout. This one pretty much just near that, right up to the edge. So this gives us a statistical edge, okay, in terms of price ranges and where we want to put on trades, or how we manage our risk profile on a trade. Okay, so if we know we're up, you know, price is up near a statistical extreme to the upside, well, we're going to be less likely to be aggressive buyers. Okay, we're going to be, you know, tentative on the buy side. We're going to be looking for potential reversal signals, i.e., one of those stacker type trend shift trade setups, okay, that we have. And in doing so, we're able to take advantage of, you know, selling near a high or buying near a low. Now, keep one thing in mind, and this is kind of a trap for a lot of you know, traders, is that, you know, many seem to think that they need to buy or sell the high, okay, or buy, you know, sell the high, buy the low, in order to consistently be profitable. That is a definite fallacy. Okay, and we want to dispel that right now. What we try to do is we want to make sure that we're selling or buying near the high. We're able to identify a high or a low point, right, from a measured statistical basis. If we're able to do that, okay, then we're able to move forward and again, get on that correct side. So this is we talk about this. This is active on our trading platform throughout the course of the day. All right. I briefly will highlight some of the key levels. Many of the times in the daily trading strategy briefing that is sent out to everybody, these levels for that particular day are noted. Okay, so everybody is prepared in advance, whether they have the software or not. Right. So also one thing, just keep in mind, just as I think about it. The software that we have is really, they're trader tools. There's one thing that I want to make perfectly clear, is that the software is not required, okay, to be part of the membership, be part of our group, all right, be part of, to get the education, okay. My primary purpose is to educate traders, okay. It's not to sell software, okay, although that's part of the, you know, the model, but you know, for those that you know, want to participate using it. But I display these charts all day long for everybody, you know, trial members as well as full members, whether you have software or not. And so don't feel as though that oh my, I got to spend a lot of money, you know, to buy this software. Okay, that's not the case. So if you're a little anxious about, you know, that in looking at all the software and everything that we have here, you know, it's really, I'm focusing on trader education. Okay, that's number one for me. All right, that's my purpose. Okay, that's my mission. All right, my mission is not to sell software. Okay, that's not my primary mission, and I want to help everybody here to become a better, confident trader. And again, that was my mission goals as I laid them out. Okay, so I just wanted to make that a point here as we moved along. Now, the next chart, again, I'm going to drill down a little bit quickly because we're extending in here. 5-minute chart. Okay, this is our next baseline chart that we look at. There is a lot of levels here, a lot of numbers. Again, don't be dismayed or scared about any of this stuff. We talk about these levels, and again, our members become intuitively knowledgeable about what we're looking at. I explain everything. In the off hours, in training sessions, we hold Wednesday workshops, all right, on a consistent basis that we go over everything in terms of concepts, in terms of software. Okay, and that's an ongoing training continuum. Okay, so when you see these during the day, I may make reference to what about that that 73 price level today. Okay, that 1873 price level was a key level. Okay, this was based upon our opening range strategy today. All right, was the S&P 1873 level. Okay, failure. What we talked about was simply failure to get above 73 and hold 73 puts the pressure on the bulls to hold it, and puts the advantage to the bears. And so pretty much right about here, about 11 o'clock or so, we decided that this market is not going up any further. Okay, it's weak, and we're going to be continually trading from the short side at that point. Okay, so during the early part of the session, we were kind of, oh, this is going to be another boring session today. Very narrow area. But when finally the price decided showing us what it wanted to do, all the participants in the world, all right, the price, everything shows in price. Okay, so once we see that this is unfolding this way, now we say, okay, now we want to trade it from the short side. Okay, and again, we're going to drill down. Let me quickly show you the YM. Okay, the Dow Jones. This is a real good representation of the opening range 5-minute average, which is this cyan dotted line right in here. Okay. Again, same situation. We had a gap down. Okay, and then it just failed to rally. It just kept going down a little bit, bounced up a touch. Okay, and everybody thought, okay, hey, we found the low. Okay, well, what happened here was the death knell right here. Price could not get back above that opening range average price there at about the 16,410s. Failure to have done so as it did, right, places the sellers in control. Okay, and as you can see, subsequently what happened is made a new swing low, bounced back up, and this time it failed to gain any strength. And then, as you can see, as the rest of the day unfolded, it just kind of drifted away, and it closed there down the low. So this is that key anchor point that I've discussed earlier on the PowerPoint slides. That is a key level on a day-to-day basis for us. Okay, so again, one of the things you'll learn is about these key strategies. Now, I just wanted to interject here and mention that when I was a market maker for the investment banks, okay, for Lehman Brothers, for United Bank Switzerland over the years, okay, as a professional trader and market maker, we use this exact concept as I'm displaying it to you, okay, on a day-to-day basis, whether it's for the S&P E-mini or whether it's for Dell Computer or IBM or Merck and Company or any of the, Facebook or anything out there. Okay, this opening range strategy is universal in terms of how it's applied to various instruments, okay, and individual stocks. So it's a very powerful strategy. But the key about this is it's simply our initial bull bear line for the day. All right, are we going to be bullish or bearish today? Well, where is price relative to that 5-minute average? Okay, that's a key. All right, so once we complete into the the 5 minute, again we refer to the 5 minute charts quite often during the day, and you'll see here even on the day session chart here we have an X zone, and so as you can see from our initial shorts throughout the course of the early part of the session in the day, one question would be, well, if this broke down, okay, what would be some of the targets that we would be looking for? And as a matter of fact, in the opening trade strategy briefing this morning, we had specifically highlighted 1862, all right, as a target. Okay, 1862 to actually 1859 was the zone. Okay, and you can see right there, pretty much right to the tick. Okay, and you can also see here there's an X zone. Now these X zones are already placed on the chart in advance, so if we're short them up at these levels as we were today, okay, the question was, well, where are some of the targets? Well, you're going to use a 5-tick target, a 6-tick target. Well, that's fine to get to a point, but we want, if the market has potential, okay, beyond our 2-point rotation, which we typically trade for, but if the market has potential, and I'm trading a multiple contract position, greater than 2, all right, perhaps I can keep that one contract, open and see if I can get, shoot for the lower target. Why not? Again, this is where we excel, with our money management and our risk management and our P&L. Okay, again, no guarantee, but this is what we try to do. So our normal 2-point rotations throughout this, up and down, section here, okay, and we did okay with that, but we decided, hey, the main trend is down. We want to primarily trade from the short side and then hold on to some what we call runners in the event that we get a break, we get a break in price, and so we did. So let's go right to the execution charts, and this is where the fun part begins, and I'll show you some specific trade setups that we took. This is all from today's session. Okay, this is actually a rendering of what we did today. This is actually what I highlighted. I do a lot of annotations throughout the course of the day. I draw boxes, I draw lines, I make sure I try to give as much visual presentation for our members throughout the course of the day as possible. Okay, so you're not sitting there wondering what are we doing next. Okay, as a matter of fact, I'm overly trying to prepare everybody, okay, for the next event, for the next opportunity, okay, to be prepared. Hey, watch for a premium, watch for a discount, watch this level to see if it fails. If it fails, we want to be taking a trade from that level. So it's very much in advance for everybody. Okay, so again, you're not on your own. All right, we are, we're very much an active group in the room, and our membership is real good in helping and supporting each other. So something that to keep in mind. But as the day unfolded today, specifically, we have, again, as I mentioned on the slides earlier, we have a trade setup using the CCI, and down below here is what we as our proprietary version of the commodity channel index. We use a dual CCI for two different time frames. Okay, and in doing so, we simply call it the trade strategy premium and discounts. Okay, and just simply premium, it describes when price is above a certain combination of value. So this zone here that you can see between these two moving averages, okay, and these moving averages, by the way, are 34 EMA and an 89 EMA. Okay, so again, we're pretty transparent about it. I'm not trying to hide anything. Nobody hides anything in our membership. I'll tell you what the values are. Okay, but really simply what that shaded zone represents for us is a value zone. Okay, fair value, if you will. It's a dynamic fair value for us, the way we define it. Okay, I'm not defining it in terms of market profile now. All right, it's a little different, but that's a dynamic fair value zone for us. So in a downtrend like we see today, all right, again, somebody had asked Patrick about changing of the slope of moving averages, the colors. Okay, so here's an example of it. And in a day like today where we had a downtrending action, you can see here that price, after finding some support around the 70 handle, popped up to about 73s or so. Okay, again, that 3-point rotation we spoke about, right? That harmonic number. Well, what happened here is you can see these text called PREM and a number beside it. Well, these are live signals. These are not after the fact. These are absolutely live, and these highlight trade opportunities for us. These are alerts for us. Okay. Now, not every signal translates into a trade, but following the method and so forth, many of them do, in fact. So these were actual short trades, okay, that we took today. So you can just simply see here where I kind of put a little cap at it. There's an arrow, there's a white bar, it's called the alert bar, and then some text prints at the same time. So what we want to do is once we get that alert, and by the way, it's not only visual, but we have some audio alarms as well. All right, to help kind of wake you up if you're kind of snoozing. But what we want to do is once that signal is in place, okay. Okay. I just saw the screens flash there. It looks like Sierra chart is offline now, the server. So what we want to do is when those signals fire, we want to look to take a trade, enter a trade, and what we call the right side pivot rule, the right hand side of the high bar. Okay, so simply I put a diamond where today's trade occurred. So that was a short trade. I didn't put the exit point. This was just the entry point. And then as you can see, the price rotated down. And then for those in our membership that took these trades, we simply would scale out, okay, of this. And I'll show you a technique in how we scale out with our software. And then again, subsequent, we get another bounce shortly thereafter. And again, we got another new premium signal, a brand new trade opportunity. So that trade earlier, that sequence was complete. A new one developed. Again, live trading, live signal. And then we're able to take the trade approximately, okay, that's what was happening. Approximately the 1871s, okay, to get short. And in this time, all right, again, trying to normally go for our 2-point rotation, this one dropped many handles here. So I know particularly one of our members did very well on this, okay, today. And and it was just sometimes the market pays you really well, sometimes it grinds. Okay, we don't know which one's going to occur, but we stay consistent to the approach, very disciplined. And then lastly, here we had a late one near the lows. And again, one of the things that I want to mention here about taking trades, and this is common to not only retail traders per se, but even professional traders. How do I get rid of this? Okay. Is that when traders are faced with loss, all right, oh, they have a trade loss, okay, when they're faced with a trade loss, what happens? All right, when the next opportunity comes, what do? Well, I may not want to take that trade, right, because I just had a big loss, or I had 2 consecutive losses. Well, what happens is the next trade setup comes, they don't take it, and that's the one that becomes the big winner, all right? And so talk about rubbing salt into a wound. Okay, I mean, we've all been there. So, I mean, I'm not immune to it. I never have been. But what we need to understand is if you're following a methodology, whether it's PolarisTradingGroup methodology or some other methodology that you're currently using, okay, and and it has, a good results, okay, consistent results. Well, when you get that next trade opportunity, you must take it, win, lose, or draw. As hard as it may be, all right, I want to encourage everybody to do that. This is why most people want to program computers. They want to let the computer do the job, okay? Because they don't trust themselves. Well, part of becoming a confident trader, a consistent trader, right, is developing that sense of trust within yourself, okay? One of my missions, again, is to help you learn these negative habits and form newer, empowering ones. to help you become a strong, consistent trader. Okay, so I'm always in the process of encouraging everybody. Okay, so you missed this one, don't worry about it, shake it off, move on to the next one. You had a loss on this one, okay, don't worry about it, you'll get the next one. Okay, and many of our students are making very good progress, and I know one in particular this week had 2 losses in a row, and he was pretty upset about it. All right, but he didn't execute it as he perhaps should have. And again, I won't get into that, but he realized what he did, and I said, well, you have to take the next valid one. And then he took the next valid one, and guess what happened? He made it all back in one trade. Now, again, he didn't shoot for the fence. I mean, we don't suggest anybody, slamming for the fence, but he made it all back in one trade. Okay, so it's really important that you are consistent in terms of your approach. Okay, one thing I want to before we wrap up here, you see up here in the top hand corner it says account size. All right, $20,000 and the risk percent 1%. So we have something called a position sizing tool. Okay, and so for instance, this particular trade setup, just by simply it's one of our proprietary tools, but simply by right-clicking, all right, let's just say you wanted to take this premium here at the 1871s or so, okay? So you right-click and you go set entry, okay, 1871s, say 50s, okay? So it gives you that price point, the entry. Now you have to place a stop level. So right above the high here, we're going to say, okay, I'm going to place a set stop. All right, so now I set stop here, all right, and again, the text is over here to the right a little bit, but you can see that on the basis of a $20,000 account on this particular trade, you can trade, based upon those parameters, you can trade 2 contracts or 2 units, all right, that will keep you within a risk parameter of a maximum risk of $200, okay? That being said, the key point here is where the risk-free level is. You can see this yellow line here. Okay, this denotes the risk-free level. Let me just draw a horizontal line there. All right, so at this point, if you entered pretty much where that diamond is, this would be the risk-free point. So if you sold 2 contracts at that risk-free point, okay, so let me just ask everybody a question. Where and you can just answer it to yourself. Where are you at what point in the trade are you at maximum risk? Okay, you're at maximum risk when you first enter the trade. So that's why we have to put a stop loss there. So that's on my maximum allowable risk for this particular opportunity. Okay. Once I reach the risk-free level, though, and again, assuming that the market goes in my favor, all right, once I reach that level, I can elect to do a couple things in managing the risk. I can, one, buy one back, okay, and that would reduce my contracts from 2 to 1. All right, and that would produce a risk-free. Or another alternative would be if I think the market has greater potential, to move lower. In this example, I can then move my stop point from the original stop down to break even. Okay, many of you familiar with doing that. Okay, so you can do manage the trade in various ways. But what is important for us and for our members, and when they do each of these trades, is that they know exactly what their risk parameter is. All right, I've seen too many times where somebody has, let's just say, a 2-point stop and it's going against them, and oh, I'm just going to loosen my stop a little bit further. That is a cardinal sin. All right, stop it right now if you're currently doing it. All right, what this does is it tells us what our risk-free point is. It tells us what our max risk point is. And then beyond that, okay, we can set certain targets. These are optional, okay, in the method. And so these little green lines here. So what is not optional is your entry, stop, and then the risk-free. Those are mandatory. Beyond the risk-free point, once we're able to help, once you're able to get yourself risk-free, then the targets, then you can get, a 2R value, right? 2.7 times reward to risk units. Okay, that's great. A lot of people think, hey, I need to have a 2 to 1 reward risk ratio, all right, each and every time, or I can't take the trade. Well, that's really untrue. because how do you know, which trade you should be taking and whether or not it's going to generate a 2-to-1, risk reward or reward risk ratio, right? We don't know. All I know is when I'm actively trading, I know what my initial price is, where my risk-free point is, and my stop. Beyond those parameters, okay, the market can then pay us more or not pay us. So what we simply were trying to do when we talk about our 2-point rotations, okay, since they're the most common, okay, they're the most common and the most frequent, okay, we simply want to get 2-point rotations on, a couple contracts, right? $200 here, $200 there, $150 here, $150 there. It adds up, okay? And again, we manage risk, feverishly, okay? We do not ever move a stop against us. All right. So I want to end there, because I think it's important that we end on a note where in terms of managing your risk, okay, and the profit potential that we all want to achieve. But in order to do so, we have to follow certain procedures. We have to follow the method. Again, whether it's this method or somebody else's, okay, whichever one you're using. Make sure you're really focusing on it, okay? And if you don't have a method, if you're totally unsure, okay, again, we can, with the education here and what we do provide for everybody is that, in fact, a structured approach, okay? So, if you don't have that, come by, visit us. What we'd like to do is offer everybody. Let me just put this new slide up here. Oh, wrong slide. Okay, right, next one. There we go. I'd like to offer everybody that's attended today, a 14-day free trial to come visit and see what we do. Okay. Normally it's a 7-day trial. All right. This is special. We're going to double that for everybody here that's visiting with us, taking a lot of time out of your day to come visit and listen up. And also for those of you that have Sierra chart, okay, many of you already do. Many of you are visiting from outside the Infinity family themselves, whether you're using Sierra chart or not. For those that have it, concurrent with your free trial, I can offer you simply a free trial to the trading software, everything that you're seeing currently right here, okay, and even more. All right, and if you don't have a Sierra chart, okay, I would highly recommend it. And you're interested, give Patrick Zielbauer, or if you have an Infinity account already, definitely go visit with them. Okay, ask them about it, and they'll, it's very easy setup. Okay, I can get everybody set up. All I need is a username, and I can get everybody set up within a matter of 5 minutes. All right, it's real easy to use. And then the final benefits in terms of, again, coming to the room. I talked about that pre-market briefing, live active analysis, again, throughout the entire session. We take a break for lunch. Okay, I take an hour break. I stretch out. I go, get some air. I suggest everybody does. Those that trade on the CME and the SIBO, when they're in the pit, lunchtime, they get away. All right, the stress of trading all morning and on the afternoon. Everybody needs a break, so we try to pace ourselves throughout the day, as well. And of course, our community, is really friendly, okay, so, and they're very, very helpful with each other. So I'll be happy to, field some questions, or if Patrick, can pass them along, I'll be happy to answer anything that you guys have. All right, and that really concludes what I wanted to get across to everybody. Okay, great. Thank you, Patrick. And again, thanks, everybody.